This is Matthew Kratter's Bitcoin University. Today I want to answer the question, why is Bitcoin performing so poorly? The Bitcoin network itself is functioning beautifully. Fees are low, transactions are not being censored, the consensus rules are being enforced, so life is pretty good. Everything is great actually except for Bitcoin's fiat price, especially measured against its greatest and perhaps really only competitor, which is the US dollar. Now, the Bitcoin 4-year cycle traditionally kicks off with a halving, the most recent of which was April of 2024. And we can see here a mapping of the different halvings on top of each other. So we've had 4 of them since Bitcoin's inception. We had a halving of the Bitcoin mining block subsidy in 2012, in 2016, in 2020, and most recently, as I said, in April of 2024. So based on this mapping, we can see here the top purple line, this is 2012, the green line is 2016, the blue line is 2020, and the black line down here is the shifted version of the current cycle. And we can see for 341 days after the halving, which is when I'm recording this video, Bitcoin's price has severely underperformed all previous cycles and halvings. And if we scale the current halving and where the price should be relative to previous cycles, if we scale the 2012 price at this point, 341 days after the 2012 halving, we should be trading at $1.1 million per Bitcoin. The 2016 scaled price should be $235,000 per Bitcoin, and the 2020 scaled price should be $418,000 per Bitcoin. So we're massively underperforming, as you can tell from this graphic. And even the 4-year compound annual growth rate, which is sort of a smoothing of this, is, as Pierre Rochard points out here, is at historic lows, trending, it looks like, down to 13%. So this is not good news. And even if you were expecting diminishing returns for each subsequent Bitcoin 4-year cycle, this cycle's price action since the April 2024 halving has been especially disappointing, as we saw from that chart. So what are some possible explanations? That's what I wanted to explore today. Explanation number one, possible explanation number one, Bitcoin's fiat price is being dragged down by macro factors, including global uncertainty over the Trump tariffs and geopolitical realignments. Everything's being thrown into question, whether European countries are U.S. allies, what's going to happen with Asia, what's going to happen all over the world. And then there are also Trump and Elon's efforts to shrink the U.S. federal government and its spending through Doge, which, to be clear, I do support 110%, but we're going to talk about its impact on GDP in a moment. I'll just pause here very briefly to ask you, if you're enjoying this video so far, to please help to support this channel's educational mission. Hit the subscribe button, that does really help. Leave a like, leave a comment, question, suggestion for a future video, and share this video with a friend or family member. So as part of the Doge cost cutting at the federal government level, this leads obviously to less U.S. government spending. We'll see how much ultimately is saved. But the more you lower U.S. government spending, because U.S. GDP, one of the components is U.S. government spending, which is kind of stupid, but this does mean that we could see U.S. GDP shrink. And when U.S. GDP shrinks for 2 quarters, that's classified as a recession. So that may be starting to get priced in for risk assets like stocks and Bitcoin. That may be why Bitcoin's price has been so weak over the past 12 months. Risk assets, another name for risk-on assets, basically anything that rallies during a bull market and anything that sells off or goes down during a financial crisis or recession. So typically things like stocks and Bitcoin. Risk-off assets, anything that goes up or stays level during a financial crisis or recession. This has traditionally been U.S. Treasuries as an asset class, as the ultimate safe asset class, but maybe not this time, especially given where government spending is and where debt to GDP is. There's some question about how the U.S. is going to get out of its debt crisis. Now, Bitcoin itself is the ultimate risk-off asset. It's a safe haven since it has zero counterparty risk and zero dilution risk, unlike any other asset out there. But the market doesn't understand this yet and still views Bitcoin as a risk-on asset, and hence this correlation with other risk-on assets or risk assets like stocks. And this is why over the years, on and off, Bitcoin has often been correlated with risk assets like the NASDAQ, the QQQs, or the NASDAQ comp. And the NASDAQ has been selling off for the past month or so, at least partially in response to Trump's new America First investment policy. I'll put a link to this in the description notes below. This came out on February 21st, 2025. And this memorandum basically takes a hardline approach to Chinese investment in the U.S. and signals that Chinese investors will be receiving extra scrutiny. So this is clearly leading to an exodus of Chinese capital from U.S. tech stocks since February 21st, when the memorandum was first published. And that's when this laydown began, just a day or so before that was published. So someone obviously had insider knowledge of it as well. Explanation number 2. Wall Street banks, corporations like MicroStrategy, now known as Strategy, and even nation states have been buying Bitcoin, but they have been met by selling pressure from individuals. Are these whales cashing out after 10 years to buy the requisite mansion or yacht or airplane or something like that? Or are these just paper-handed retail investors taking profits? There's probably some of both. I'll put a link here to Glassnode. They have some good reports on this in terms of long-term holders and short-term holders. And a lot of this is guesswork, but it can still be quite interesting. And so this was as of March 26, 2025. Challenging market conditions continue, with Bitcoin short-term holders finding themselves under increasing financial pressure. And then under the surface, there's this shift toward actually more like whales, long-term holders, accumulation going on. So there are different cross currents here. If we take a look at 2024, this report from River was quite interesting. 2024 change in Bitcoin ownership. We have funds and ETFs, mainly the BlackRock Spot Bitcoin ETF, and businesses as well, mainly Strategy, obviously. We have funds, ETFs, and businesses buying nearly 900,000 Bitcoin, and then we have individuals selling off 525,000 Bitcoin. This other category, it says changes in Bitcoin to be mined, Bitcoin held in smart contracts, and estimated Bitcoin lost as well as governments selling off 62,000 Bitcoin. So basically, it looks like individuals mostly have been selling to funds and corporations, which is great for those funds and corporations, but it's not great for those individuals giving up on those potential returns. So that'd be another explanation. There's basically just some movement here in the ownership distribution. Explanation number 3 for why Bitcoin's fiat price action has been so poor lately. Explanation 3 is that there just is no good explanation, and Bitcoin doesn't owe us an explanation. Bitcoin can obviously do whatever it wants, and there's no rule that says that Bitcoin's 4-year cycle price action needs to always play out in the same way. We would expect diminishing returns, but there's no reason that the 4-year cycle has to continue, especially when the block subsidy has gotten so small. It's fallen from 50 Bitcoin per block to 3.125 Bitcoin per block. So there's an argument to be made that the halving matters less and less. The counter argument is it does matter as sort of a self-fulfilling prophecy, but there is no rule that says these 4-year cycles need to map out the same way. And there's no rule that says we even need to have 4-year cycles. We can have an extended bear market, we can have an extended bull market that even overlaps those 4 years. And the thing is, in markets, the more people expect a certain pattern, the higher the likelihood that that pattern will stop working and will no longer be tradable or investable. And this is why the profitability of trading systems decays over time. This was an area I used to be quite involved with, so I can tell you that this is true. There's no rule that says that every halving cycle has to play out exactly the same way as we said. And so my perspective here is that cheap sats is always a blessing. It's impossible to time Bitcoin, so you're going to be much better off if you simply keep dollar cost averaging, DCA, which means buying a fixed dollar amount every day, every week, every month, regardless of the price of Bitcoin, regardless of the fiat price of Bitcoin. You just DCA and get on with your life and do more important things, because really checking the price of Bitcoin many times a day, as I know many people do, and I'm guilty of this myself sometimes, checking the price of Bitcoin many times a day is about as rational as checking the price of your house on Zillow many times per day. It makes zero sense for a long-term investment, and it's probably just another sign of a dopamine addiction, which I may have as well, obviously. That's why I prefer to focus on Bitcoin's fundamentals, which do remain stellar. There's simply nothing else like Bitcoin in the world. There is no second best. So I'm going to keep accumulating, and I hope you will too. Bitcoin will do its thing when it's good and ready. And this is the classic meme for that. Come on, do something. And then we get this green omega candle that blows through everything and goes much higher than anyone was expecting. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.